kick us off, and we'll keep letting people in as they join. Thanks so much, everyone, for taking some time out on your Thursday. It's really nice to see you and appreciate seeing some faces with your videos on. It's always refreshing. My name is Rachel Lieblein-Gerbala. I am the programs manager at the Spencer Educational Foundation. We are a 501c3 nonprofit organization dedicated to supporting students who want to pursue careers in the risk management and insurance industry, and we do that through scholarships to students, through internship grants to risk management departments, as well as grants to universities and organizations for experiential learning opportunities for students, as well as RMI course development. So that's a little bit about Spencer. And before I introduce our speaker today, David Gritz, for his session, How to Start a Startup, I have a couple of housekeeping notes. So the first piece is that this session is being recorded and will be posted on our website after the fact, so you can reference any information you hear there or here today there. So if you don't feel comfortable being recorded, please just keep that in mind. Turn your video off if that's something you're not comfortable with. Again, if you just joined, we'd love to hear from you. Please feel free to introduce yourself in the chat with your name, where you're calling in from, and your university or organization. David is going to start off with about 20 minutes of chat to hear about his life, about in the InsurTech world, and some other information he has to share with us. And then we'll be turning it over to you all for a really robust question and answer session. So if you have questions throughout, please feel free to just pop those questions in the chat so you don't have to hold on to them. And also at the end, you can also feel free to unmute yourself, raise your hand. We're just going to have a very comfy, open conversation. So we'll facilitate as we go. And with that, it's my pleasure to introduce David Gritz, who is the co-founder and managing director of InsurTech New York, which is an accelerator and global hub for the InsurTech community. In addition to his leadership with InsurTech New York, David serves as a strategic advisor to InsurTech companies, helping them go from concept to scale. Previously, David has served as Director of Innovation for the Silicon Valley Insurance Accelerator and has led product at Zero, which is a behavioral safety-focused InsurTech acquired by Everest Re. David holds a Juris Doctor degree from the Mitchell Hamline School of Law, as well as business and industrial engineering degrees from Lehigh University. And with that, David, I'm going to pass the floor over to you. Thank you so much for being here. I'm really excited to hear what you have to say today.
Great. Well, thanks, Rachel. I really appreciate the opportunity to present to your group today. For me, it's always an exciting thing when I get to meet students that are interested in startups and entrepreneurship, because with InsurTech New York, really our goal is to move forward the insurance and risk management industry by bringing new technologies and hopefully helping startups gain traction and come to the forefront. And a lot of the startups that exist there out in the world, they're new companies, right? They're anywhere from a few weeks old to less than 10 years old. And one thing that's in common for all growing companies is that they need people, and they need good people. And I think anyone who is on this call should be thinking about, as they're going through their career, that there's a viable option to be one of the people that starts one of these companies, one of the people that joins the early management of these companies, or just starts in an entry-level role. There's companies like Lemonade, Hippo, Metromile, States Title. They're all now public companies and have gone through the life cycle from being a one-person company to being multiple thousand-person companies in a period of less than 10 years. And I think if you think about that as a young person, as an opportunity, if you can be involved in a company that's growing from a small kind of individual kind of opportunity to a 1,000-person company, there's a lot that you can learn. There's opportunities for leadership. There's opportunities to gain skills across multiple areas of the value chain. So it's always exciting to me, and hopefully my goal of this presentation is really to educate you on the InsurTech world, generally some things to think about if you wanted to personally start a startup, and hopefully a little bit about my journey so you can learn that what I did and some of the paths that I took to kind of inform your choices. And there's no right way. There's just a lot of different paths, and hopefully I can share some of those. And some of my entrepreneurial experiences have been not in the insurance field, but they've been very educational and useful for me in the insurance and risk management space. So what I would say is how Rachel and I set this up is there's about 20 minutes that we'll go through, and I'll talk at you, and then we'll do about 30 minutes or so of questions. So I'm sure that Rachel has questions, but I think as you go through the presentation, if you have questions, feel free to put them in the chat, or if you want to kind of write them down and then you want to share them verbally. But I think what will make it more vibrant and hopefully allow you to get more out of it is to figure out a question that you have that maybe can help you learn a little bit more about this startup world in insurance. So I am going to kind of get started. So this slide was actually adapted from a presentation that we did for a group of insurance carriers in partnership with Novarica earlier this week. And I thought it wanted to give a little bit of context and put us in that kind of insurance world, right? So if you think about the insurance industry as a whole, what we do is we take risk that exists in corporations, for individuals, in the financial markets, and we essentially move it through a number of steps, applying knowledge and information to ultimately people that have capital that they're willing to take that risk, and we profit off of it, right? So at the first level distribution, right, like we discover people that have risk, whether it's an individual that has a car that they don't want to self-insure themselves if they get in an accident, right? Or it's a business that has a cyber liability that they want to protect against, or it's a large enterprise that has thousands or millions of assets that they need to protect, right? And then those distributors, once they identify it, right, those agents and brokers, they pass that on to a manufacturer or an insurer that has a product that provides cover for that. And then ultimately those insurers have certain appetite of risk that they want to hold, right? Where they may want to insure autos, but they don't have the capacity to insure all the autos in Louisiana during a hailstorm, right? So they're not ready for a correlated risk. And that's where reinsurers come in and ultimately eventually take it out to the capital markets. So if you think about that, that is like the industry as it exists today, right? But the industry is in the process of transforming, right? There's new ways and new forms of connectivity that are being created, right? There's ways that businesses or individuals are directly getting access to capital markets to protect it against things like flood risk on the top. There's new forms of distribution where insurance companies sell without brokers and agents direct to consumer online. There are distribution programs that connect early stage startups, they call them digital MGAs, directly to reinsurers to provide them with financial capacity. So there's a lot of new things being created and transition, and that's where a lot of these opportunities for startups exist, is to kind of manage the transition from this relatively straightforward process to a bunch of different hybrid alternatives. And really, I think there's 6 different ways that I see that startups are looking to improve that overall value chain for risk management. The first is, or all the top of them are thinking about connecting with ultimately the risk manager or the individual. So they can work to improve their customer experience. They can work to change their business model. So going from that first slide to that second slide, or they can work to improve distribution. And many lines of business and insurance, there's tremendous opportunity. There's some companies that are saying that 70% of individuals are underinsured from a life insurance perspective. So if you can help millennials understand the value of life insurance, that's a new form of distribution. If you can help small businesses understand the importance of having professional or general liability, that's actually helping those businesses to be more resilient and more robust. And then there's also just being able to help improve the existing distribution in existing markets, right? Like if you think about Root Insurance, they have a different angle for providing auto insurance by determining how good or risky you are as a driver. So the bottom half is really within the mechanism of the insurance or reinsurance carriers, right? So how can you improve the operational efficiency or save money, right? So on one side, on the bottom left, is how do you reduce administration or loss adjustment expenses? Are there opportunities to simplify the paperwork, to reduce the amount of steps that an underwriter or a customer service rep has to go through? Or on the claim side, how do you reduce the cost for adjusting for a claim, right? And then there are other part of risk is what probably a lot of you guys study is thinking about the actual impact, right? So like, let's just say you have a workers' comp claim where someone's injured at work. How do you get that person back to work in 1 week instead of 3 weeks? So how do you mitigate or how do you prevent a claim? Like how do you use telematics to alert someone that they might get into an auto accident and prevent it from happening? And then the last way is like, ultimately, that whole value chain of risk management relies on underwriting to create a profit. So how can you look at the overall process and say, what additional data or insights or analytics can we use to find more profitable business or to price the premiums more effectively? So these are really the 6 ways that I see startups coming into play in the space. But it probably wouldn't make a lot of sense without some examples. So I took our 2020 cohort of startups in our accelerator, and it's kind of in front of you in the center of the screen. And essentially, I mapped it out to, there's companies that are on the insurance focus, right, distribution, and there's other companies that are on the technology focus. So kind of picking out some of these, and these are all companies that you could read about, and if you guys are personally interested or want to work there, I'm happy to introduce you to the founders of the companies. So starting at the top middle is Surely. So that's a company focused in the distribution space, specifically around professional liability. And I think one of the things that is a challenge in professional liability is that there are certain industries or segments where it's nearly mandatory. If you're an attorney operating in many states, you legally have to have professional liability insurance, right? But if you look at other areas, right, maybe you're a starting architect or maybe you're a real estate agent, you have similar, if not in some cases more risk than an attorney, but you may not be aware of that risk. And I think there's opportunities for startups to be able to better educate the businesses or the business owners on that risk and provide support there. So Harbor AI sits in that kind of middle wholesale space. So they're helping brokers to place business with carriers, but they do get a share of the commission on that. Dealer Policy is actually one of the largest companies that has gone through our accelerator program. They're a more than 400-person company, and they focus in the auto dealership space, so helping auto dealerships and online auto distributors like Carvana to be able to offer insurance when you purchase the car. And then at the bottom, there's Guardhog, which is a UK-based company, and they focus in a very specialized area of vacation rental, right? So if you were going on Airbnb, or if you were a host for Airbnb and you want coverage in case people damage your home, Guardhog does that in the UK. So that's some examples of companies that help in that distribution or having better customer experience, right? Like with Dealer Policy, if you can buy a car and get the insurance at the same time, that's a better experience than having to talk to your agent and go through a quoting process and then get the information about the car and then eventually get the policy. Instead, you can just get it all together. On the other side, there's a number of technology providers that help in that improved underwriting. They help in reducing loss adjustments expenses or just improving the overall operations, right? So Neural Metrics is a company that is a data provider. So in the small business space, one of the biggest challenges that underwriters have is learning about the businesses that they're underwriting. So imagine if you were an underwriter and you were looking into a small hotel that maybe has not the clearest website, maybe has very small internet presence. They don't have Dun & Bradstreet number. They don't have data that's in the normal places where you might source it from. And Neural Metrics will comb the internet, provide additional data, and help you answer underwriting questions, right? So if you want to know, do they have a pool? Are their their help staff independent contractors or W-2 employees? They help identify and answer those questions and speed up the process for an underwriter doing that for accounts that would normally not have that data easily available. Relay plays in the submission space. So one of the challenges is when an agent submits business to a carrier, it's not always in a format that's easy to consume. Relay addresses that by basically making that pathway from one group, like a broker, to a carrier much simpler and more automated. Pinpoint Predictive is a company that's in that big data and analytics space. So they essentially provide information about individuals' tendencies and proclivities, so psychometrics, to be able to predict if someone is more or less likely to do a claim, more or less likely to have fraud committed. So they can ultimately help insurers to more effectively market to the customers that they want to have opposed to the ones that they don't. And then Trust Layer is also one of those examples of just improving customer service. One of the things that takes a lot of time out for customer service agents is when you go through the process of issuing a certificate of insurance or collecting certificates of insurance for your contractors if you're a risk manager. So Trust Layer helps to automate that process. But as you can see, that was just really 4 or 5 on each side. There was more than that in our accelerator. But my hope is that you're curious about some of the companies that you see, some of those logos, and maybe you'll write down 1 or 2 logos that looks nice and look it up on your own and see what they do and why that is a problem worth solving. And I think that's one of the key things in entrepreneurship, in startup, is in order for you to be successful as a startup, you need to find a problem that's worth solving that a customer is going to pay for. And you have to be good enough that that person, that what they're doing now will overcome their inertia to be willing to work with a new company, right, that doesn't have a lot of traction or track record of doing it and do it. So that's one of the key challenges, and hopefully you'll find some of these companies here interesting to you. But if you have questions about this, like, happy to answer those questions about any of these companies. Okay. So one question came in: what criteria does the company and the accelerator need to enter the cohort? So our accelerator works with companies that are in growth stage, so they have to have at least 250,000 in revenue. They also have to be in the insurance space, so either selling insurance or providing technology to someone in the insurance value chain. And then to actually get selected, they have to be interesting enough that one of our 7 insurance carrier and broker members want to work with them. So those kind of our criteria. So this kind of leaves the crux of it before I go into a little bit about my background, which is, what do you actually have to do to start a startup, right? So the first thing is ultimately the founding and ideation. So you need to if you don't have all the knowledge and expertise and in your head, right? So maybe you know about underwriting, you know about risk management, but you don't know about software development. You need to build a team. You need to find a co-founder. You need to make initial hires, right? So the first stage is building the team, finding it, coming up with the idea. The next step is market discovery. So doing research, talking to potential customers, understanding what you want to build and refining it to the point that there's essentially enough clarity that what you offer to the market will be helpful enough to people that they would ultimately buy it. And I think this is one of the biggest challenges for startups, because a lot of startup founders, they want to just go and build something and hope people will buy it. But the very best startups come from people that were in the industry or know about that problem very precisely or did the research so they can launch and get a lot of traction right away because it's a problem worth solving. Once you've answered that question that the problem is worth solving, then you have to create a minimum viable product or an MVP. So for an insurance policy, that typically means you have to get it rated, you have to have it filed. If you're a startup, you probably don't have enough financial backing to become a carrier, right? So you need to have an insurance carrier behind you that will provide capacity. You have to have a reinsurance partner that's going to handle the excess and aggregate risk that the carrier doesn't want to have. And you want to have the licenses, right? So a minimum viable product for an insurance product is all of those things. For software, a minimum viable product is a lot lower than that, right? It's a working prototype that can be tested or used by your first customer. So depending if you're pure technology or you're selling insurance, the barrier for creating a minimum viable product might be a little lower or much higher. And then once you have that, it's launching, right? So getting your first customer, pivoting and adjusting your product to meet their needs, getting press, getting recognized in the industry, and then ultimately going to marketing, getting to scale. And somewhere in between that market discovery phase and that go to market or scale phase, typically founders will raise money outside of their own friends and family, from a venture capitalist, from an angel investor, or from one of their customers to help them have enough money to hire the people to scale the business. So those are generally the things and the steps if you wanted to go on this journey on your own. But like I said in the beginning, that's not the only path, right? You can join an established startup like some company like Hippo. You could be an executive in a startup. So maybe you're the second or third or 10th or 20th hire. So that's one way that you can learn. So that's generally how to start a startup. I know we'll go into the question and answer section after I share a little bit of my background. But just as you're thinking through that, if any of it was not clear, you wanted me to elaborate or give examples, I can definitely answer questions on any of these stages because I've personally been through all of them. So my entrepreneurial journey, and I know this is like a lot on here, and I'll kind of break it out into two pieces because I know not all of you are ready to start a startup yourself, or not all of you want to do that for your entire career. And I think what I want you to realize is that there's a lot of different paths, right? Like you can be an entrepreneur part-time working on your startup. You can be a consultant and advise startup founders, or you can go through a traditional career path and be in entrepreneurial roles. There's a lot of insurance carriers that are starting startups internal to insurance carriers, or they have investment units that invest in startups. So there's a lot of different things that I've done that have kind of educated me, but the key thing here is really that entrepreneurship is a muscle. It's something that you build skills and knowledge for over time. So in terms of like my traditional career path, I studied industrial engineering and business at Lehigh. So that gave me a foundation to really have, like, I would say, some of the math skills to understand underwriting and actuarial challenges, and then also to understand from a business side, finance and accounting, and the things that are necessary to run the operations of business. out of school, I had decided that I didn't want to continue the startup that I had started in school, which I'll tell you about in a minute. So I went to work at a company called Computer Aid. I was fortunate enough to be hired by the CEO to help him do special projects and then eventually lead his external partnership program for North America. Computer Aid's like a 6,000 person software company based in the Allentown area. But that gave me like a really strong foundation because I had a great leader to learn from. So Tony Salvaggio, who started Computer Aid in 1981, he grew the company to 7,000 people without raising any external capital. So I had great opportunity to sit with an amazing founder and learn from him for the first 4 years of my career. But beyond that, I also had other opportunities. I decided to go back to law school at Mitchell Hamlin and then eventually pass the bar. I also had the opportunity to work with an accelerator in Silicon Valley called the Silicon Valley Insurance Accelerator to help them run their programs and work hand in hand with InsurTech startups out in the West Coast. So that was some of the things I've done in my traditional career path. And you'll notice many things I did in parallel. And that's one thing to keep in mind is like a lot of founders, right? Like they don't necessarily have infinite money sitting in their bank account, which means that like they might still have to continue doing their day job until their startup is far enough along that it's generating income for them or that they can raise money off of the traction that they have. So that's one thing to just like, keep in mind as a startup. And not every startup is venture backable, right? So that's traditional career path. So then my entrepreneurial progression. And I think one thing that hopefully you can learn from me is that not everything works out, but even if it doesn't work out, it's building your entrepreneurial muscle, right? So the first startup that I started was when I was at Lehigh. I created Good Semester. And Good Semester was essentially a startup that was in the education space. And originally our vision for it was to improve the experience of students as they go through like their courses from a course announcement system. So you may use Moodle or Sakai or Blackboard or Canvas. So those are some of the kind of competitors to us. But at the time, Blackboard had 80% market share, no students, no professors liked it. So we had created that as an alternative to it. And it was my first startup, right? And ultimately I decided to not continue with it after college. My business partner continued to run the company for several years afterwards, but I saw the opportunity to learn from another entrepreneur at Computer Aid, like the founder, and I wanted to do that. And like sometimes you have to make tough choices, and looking backwards, I feel like I made the right choice to start with a traditional career before kind of going into more entrepreneurial things. And then the next business that I started was not in insurance or in ed tech. It was actually in real estate. So I started a house flipping business that I did while I was working at Computer Aid. And essentially, what I did is I found real estate that was undervalued or needed improvement in Philadelphia. And we fixed and renovated and resold the properties and started to build a rental portfolio. So as you can imagine, from like an insurance perspective, I learned a lot about risks and had a lot of claims myself. So understood what it means to go through a lot of the challenges that policyholders do when they have claims. So also, when I was at Computer Aid, I had started a company with a friend of mine from Lehigh, which was more of like a fun project than I would say necessarily like a company that you could live off of, but we created Perfect Burpee, which was a company that sold high intensity interval training fitness mats. So if you think about like Lululemon, we were like the Lululemon for people that do Spartan races. So we did a Kickstarter, we launched the product, and then we sold it on Amazon. And that was a ton of fun because working in the fitness industry, you meet a lot of really enthusiastic people that they care about what they're doing, they're in good shape, and like they just have lots of energy. So that was a lot of fun. So I first really got into the insurance or InsurTech space was with Zero. So when I kind of decided, hey, I had learned as much as I could learn from computer aid, I decided, hey, like, why don't I go into the startup world? So I actually was running 2 startups at the same time. One startup was called Helium IQ, which took what I had learned from Good Semester in the education space, but applied it in a different way. So we built a software platform for helping universities to manage their cohort of entrepreneurs. And we also set up a couple incubator spaces. So we work with University of Delaware, with Rowan University in New Jersey, and then we had a spot that was not tied to any school, but was in the Lehigh Valley to help entrepreneurs as they graduated college to solve one of the biggest problems they have, which is you need to keep your costs down, right? So then you can keep running your startup. So we help over 25 young entrepreneurs that were graduating college to continue running their businesses after they graduated and still get some of the support from their universities. Because one thing you don't realize as a founder is like when you're in school, you have all the labs, the professors, the other students to help you with your business. But when you graduate, you lose all of that. So we helped extend the life of that. And then we had software that we sold to universities to help kind of the administration of that. So that was another ed tech, but I also at the same time ran a startup called Zero where I led product for it. And essentially we were a behavioral based safety software, mainly in the workers' comp space, but kind of in all general liability. So our initial customers were factories where they didn't want their workers to get injured. So there's a lot of science behind the information that if you have better awareness of the risks, you will be more careful and you won't get injured. So the idea behind Zero was 0 lost days of work. So we built a product specifically to help people to be safe in high risk work environments, working with trucking companies, working with manufacturing companies, and working with people with field services agents that are out there doing difficult and dangerous jobs. So we built Zero to the point where actually Everest acquired our company. So I kind of went through that whole life cycle. And in that whole process, I had learned a lot about the startup process and thought, hey, if I can help more startups, I can help more people. So I spent some time in Silicon Valley to see that whole evolution of InsurTechs from early on, and then brought that whole ecosystem and community to New York through InsurTech New York. And now with InsurTech New York, we really do 3 things. We run events to bring people together, traditional carriers, InsurTechs, investors and brokers, and hopefully now that you guys know about it, you're welcome to come to all of our events. Like we have students attend our events pretty regularly. We run them in New York and San Francisco. We also run an accelerator program, which is sponsored or supported by some of the largest insurance carriers. We have 8 carrier members now, companies like Nationwide, AAA, CNO Financial, QBE. And then the third piece is we have a fund where we invest in pre-seed and seed stage startups. And along the way, I've found good companies that I've advised. So that's this kind of quasi-entrepreneurial thing, which is like you can consult for and help startups here and there. And then our funds at the bottom. So that's my progression. Hopefully that was helpful, but I think Rachel, happy to open it up for questions.
Thank you so much, David. So as we've mentioned, if you have a question, you can just unmute yourself, you can raise your hand, or you can pop that question in the chat.
David, can you guys hear me?
Yeah.
Yeah. Hi, David. It's Joaquin from National Grid. Quick question regarding software, right? Where do we start from that, right? So you say in your process, right, the minimum viable product. So to do like an InsurTech company, I'm assuming you need some type of software, right? What would be like the best venue to go or to start?
Yeah, so I think the first question with any software, whether it's a startup or within an established company, is the build or buy question, right? Are you going to build this from scratch, or are you going to buy an existing software that you can customize to meet the needs that you have? So for us, for Zero or for Helium IQ or for Good Semester, there was no software that did what we needed it to do. So that was something that we had to build from scratch. But if you are selling like a surely professional liability insurance, right? There are existing policy admin systems, there's agency management systems that you can buy. So depending on what you're trying to accomplish, there may be something that you can buy today. But if you decide that you have to build it, there's kind of a whole set of things that you need to do. But to kind of give you simple 3 things, first is team. You need to find a CTO or a developer that knows how to build it. The second is building the requirements. You have to write the scope of what you need to build and connect that with the market research that you did in specific enough detail that a developer can build what you want. And then the third thing that you have to do is ultimately test and iterate. You need to find an initial customer that's going to work with you and test and iterate. So with Zero, our initial customer was Bebron Medical, and they tested and iterated with us until they were happy with the product.
Great, thank you. That's perfect. That's the answer I was looking for. So the good way to start would be to a CTO developer.
Absolutely.
Okay. Perfect. Thanks, David. Appreciate it.
So it looks like we have a couple of questions in the chat. So will the slides be available after the presentation? For sure, I'm happy to send them to Rachel to distribute to everyone. And then how do you better understand your customer? So this is actually an area that my business partner for InsurTech New York, Tony, is very good at. But to give you a few key pointers on this, I'll maybe give you 2 or 3 suggestions. So the first thing is to actually like go and find your customer and talk to them. So to use that like professional liability example, right? Like let's just say your customer was an accountant that needed professional liability insurance. The easiest thing to do is to find accountants in the universe and call them on the phone or go meet with them, come up with a set of questions and interview them. And why I say interview them is because a lot of people think, well, if I just survey them, I'll learn everything that I need to learn. And surveying is a very valid way to learn about your market, but there's so much that you'll learn by asking people open-ended questions, because when you're in early days of product, you don't know even all the questions to ask. So when you can have a conversation, sit across from someone, you're going to learn so much, and you're going to have open-ended questions, and you can ask things like, what do you think that I should be asking? Or what can I learn from your experiences? And that will help you refine yourself and then be able to interview the next person and be a little more knowledgeable. And I would say you keep doing that until you start to see a trend and hear the same things over and over again. And then you can start to refine that and start to ask close-ended questions. And then the other thing is, now that you've met those people, you can come back to them and say, here's the policy that I was thinking of offering that's going to have these coverages. What do you think about that? Because you now have a relationship with them, and they might end up actually being a customer for you. So I think interviewing is one way, surveys is another way. And then the last for software is to actually do user testing. So have them use the software, point and click and record the screen, sit next to them and watch what they do. Because understanding their behavior can be sometimes more powerful than what they can tell you from their head.
David. While we're waiting for another question, I'm curious how you or other folks in your circles that you know deal with the sort of fear factor associated with all of the unknowns when you're starting on a new process, right? I feel like it takes a very unique individual to be willing to take this kind of risk and really rewarding risk. So I was curious to hear more about sort of on that personality side? What do you need? How do you deal with the fear factor? Yeah.
Yeah, well, so I think there's different ways to look at this, but I think if you're saying like jumping in, doing a startup, becoming a founder, so there's a number of things that you can do to reduce the fear. So the first thing is really about like securing yourself financially as an individual, right? So there's a lot of things that you can do to secure yourself financially. One is ramping up your savings, right? Like if you know you have 12 months, 18 months, 24 months of savings in the bank, living at your current lifestyle, the risk is, although like you're giving up your savings, right? The risk is not as significant as if you have 3 months of savings in the bank. So that's the first thing I would do. I would shore up my personal finances. The second thing is like, right, like most entrepreneurs are not ones that you see like driving in Ferrari cars when they're just starting, right? So how can you reduce your living expenses to make it so you can not have to worry even more, right? So let's just say at your current lifestyle, you can last for 12 months. How can you change your lifestyle so maybe you can last for 24 months? So that's going to increase your confidence because you know you have 24 months to make it happen. The second thing that you can do as a founder is reduce the certainty or uncertainty that your idea will work, right? And that goes back to the market research, the market development, right? So the biggest risk of a founder is that the idea is not worth doing from a customer perspective, right? And that could mean that customers are happy with what they're doing. They don't understand that they have the problem that they have, or that they don't even know about you, or you don't have a way to effectively market to them. So by doing research and talking to your customers and building relationships and even getting agreements with your customers ahead of even having the software built. So one of the things that we did with Helium IQ is we pre-sold the software before we even finished building it. So we had a contract with University of Delaware, a contract with Rowan University, a contract with Bucks County Community College before we even finished the software. So we knew we had the revenue in the bank, we just had to finish it, right? So you can reduce uncertainty by knowing your market better and by getting commitments from your customers early on. And then the third thing that you can do is about building the right team, right? So where fear happens is where you have unknown, right? So if you are a business person, don't know anything about software development, there's probably a lot of fear because you're afraid because you don't know how to build software. But there's lots of people in the world that know how to build software. So if you get them to join your team, then that just reduces global uncertainty across the team because now that's figured out. In the same way, if you're selling insurance, right, and you don't understand underwriting, right, or you don't understand the actuarial process, or you don't understand the legal process of filing new policies, get people on your team that know how to do that. And they don't have to be full-time employees. They could be advisors. They could be people that are investing in your company. They could also just be friends that want to help you out. It doesn't have to be a formal relationship where you're paying them. And I think if you can do those three things, so get yourself personally set up, work to reduce your personal monthly expenses, and to validate your product and kind of reduce the team uncertainty, I think that you will have less fear going into what you're doing.
Dave,
sorry, you can go for it. No.
All right, Dave, it's okay again. When you start your InsurTech company, right? Like, what are the steps? Like, do you need to be with like a lawyer to go to process all the paperwork that you need?
Well, so I think it depends on what type of company, right? Whether it's an insurance company or a technology company. So if you take a technology company, there's a lot less that you need to do, right? Like that was some of the things that I was telling you before on the technology side. If you actually want to sell insurance, I mean, there's a few key steps. So the first thing is you have to become licensed, right? So if you're a broker, you need to have a broker's license. If you want to become an MGA, there's a number of other licenses that you need to have. And you need to be licensed in all the states that you need to do business. So I would say that's first thing you need to do. The second thing that you need to do is ultimately find a product, right? And you can do that in a lot of different ways. You can create a product, right? And then file it with the states that you want to do business in, or you can find an off-the-shelf product that an existing insurance company has that you can either tailor or adjust to your needs. And then the last thing that you need to do is ultimately you need to find some form of distribution, right? Like my guess is that if you're starting a new insurance product, you're not going to have 1,000 or even 100 people that you know will buy it today, but there's probably other agents or other distribution channels that can get you to your first 100 customers. So I would say those are the three like kind of critical path items if you want to start selling an insurance product.
Right. Okay. But like saying to start up your LLC company, right? You have
to start your LLC company. I mean, yeah, ultimately you would find an attorney that has expertise in new company creation, and they would file to ultimately create a company. For most startups that want to get funding, the recommended approach is to become a Delaware C Corp. So you can find an attorney that has experience with that to get you set up properly.
Great, man. Thank you, David. Appreciate it.
You're welcome. So it looks like we had a few questions come in through the chat. So I'll read the question is, as someone who is a Gen Z person and with 1 to 2 years insurance experience behind you, what advice do you have diving into this realm? A course, seminar, expo? In 10 years, our industry will be so technology driven. I would rather embrace it before it embraces me in a chokehold. So couple things that I would recommend. The first thing is to find a mentor, right? There's a lot of people out there that want to help the next generation, whether it's Gen Z or the new Gen Alpha that's coming about, right? And they may have 10, 20, 30 years experience either in insurance or experience being a startup founder. And they want to help the next generation because that's like how they feel they can contribute to the world, right? So I think if you can find a mentor, that would be the first thing I would do. The second thing is, if you're not ready to dive in, you don't have your own idea, you don't feel comfortable becoming an entrepreneur today, that's totally fine. There's a lot of things that you can do to dabble in the space, right? So you can find a startup and maybe they just need some part-time help, like a couple hours a week, and you could ultimately consult for them or advise them. In exchange, you can ask them a lot of questions to learn about their company and how they started their business. The other thing that you can do, which is kind of in between starting your own company, is join a company that has 5 people or 10 people, and they'll have enough money to be able to pay you, but you're going to be so new into the company that you'll be involved in every process. You're not going to just be doing one thing, and you'll get to learn everything in that process. So next,
thank you.
Yeah, you're welcome. So next question is, I feel like many people and students are pushed to have a safe career and are sometimes pushed to climb the corporate ladder instead of pursuing your own idea. What are your thoughts on that? So, I mean, there's no right answer to like the career path. I would say the thing that you would ask yourself if your career path is right for you is, are you living your best life, right? So if you think about like the life that you want to live, the life that you're living, are you doing things when you wake up in the morning that you're happy about, right? So like, are you the person that like snoozes the alarm clock like 7 times and you just don't look forward to your day? But if you're the person that like maybe snoozes once or jumps out of bed and is excited for the day ahead of you, the week ahead of you, the people that you want to spend time with, that means you're doing the right thing. If it's anything other than that, then you should really like look internally and ask yourself, is there something else that I can do? Is there something better that I can do? But to answer your question about like being pushed into like the corporate ladder. So first I want to say being pushed into the corporate ladder is not a good thing or a bad thing if it depends on you as a person and like what you enjoy and get out of life. And there's also good and bad companies, right? There's companies that respect Gen Zs, there's companies that respect like diversity and inclusion, and there's companies that don't, right? So you also want to make sure if you are doing the corporate ladder, you find a company that meets your needs as a person and creates a safe and like expanding work environment for you. So that's one just overall thing. But in terms of like whether you want to pursue your own idea, it's not an all or nothing, right? So for me, when I was working at Computer Aid, right, I had gotten into real estate. I tried doing the house flipping business, which I did at the same time. I also tried to create my own fitness product. So you don't have to think of it as an either or. And the other thing is, if you want to pursue your own idea, think of your life as like a marathon, not a sprint, right? So you could do the corporate thing for 2 or 3 years or 4 or 5 years, or as long as you think that you want to try it out. And if it's not working for you, you can just leave, right? Like there's nothing that says that you're shackled to the corporation for your entire life. And just because you work in a company and then go into a startup, it doesn't mean you're precluding yourself. Like my friend Justin I started Perfect Burpee with, he started his career at Olympus and left to start HackFit, which was a hackathon company. And then that wasn't working out with him. So he joined Spartan Race. And then after Spartan Race, he left to start Body App, which was a company that did like online workouts, kind of similar to Peloton. And then that wasn't quite working. So then he joined Visa and now he's at Facebook, right? So like he's done startup things and he's done traditional corporate things, and all along the way he's still continued to advance. So now at Facebook he's much more senior than he was when he was at Visa, or much more senior than he was at Spartan Race, and much more senior than he was at Olympus. So doing a startup doesn't preclude you from doing the corporate path. And the other thing about that is the corporate path is not necessarily always safer. And I know people tend to think that if you work at a company that has 1,000 people and has $1 billion in revenue, then you're kind of set for a very long time. But that being said, even some of the largest companies get bought, their executive management changes, and a lot of things change. I mean, you look at like Global Atlantic, they were acquired by KKR. They were already a big company, right? Or you look at some of the tech companies like Majesco, they were acquired by Thomas Bravo. So some of these companies go through changes that change the way the company works, and maybe you may end up that your business unit doesn't exist anymore. So safe is a relative thing, but what I think you can do, whether you're in corporate, whether you're in a startup, whether you're doing consulting or something in between, is focus on how you can shore up your personal finances, right? So how can you save money, right? How can you reduce your living expenses? How can you pay down your mortgage? How can you live efficiently? And that will give you the most options in life. So next one we have is, I'm Gen Z and blanked on the proper term. Oh, for generation, got it. Okay, Gen X. Okay, yes. Cool. Other questions?
David, that was such a high note. I don't want to bring us down, but I was curious if you've ever, in all of these different trajectories that you've taken, if there's ever been a blunder that you've made that sort of felt maybe irreversible, and how did you overcome that?
Sure. So couple thoughts on that. Has there ever been a blunder? So I would say in almost everything that I've done, there's been a blunder, but I'll give you a couple. So in good semester, right? We had gone down a path which was originally starting out selling to university chief information officers to use the software. And my business partner was a very stubborn person, and his belief was that we should ultimately sell to professors and to departments. And if you think about it, like individual professors and departments' budget is way smaller than a chief information officer's budget. So we went down that path, and ultimately, like, me and Jason had a disagreement, and I said, like, I don't think that you're going down the right path. And my words to him is like, it will take you 5 years going down this path to even ever have any substantial revenue in the business. And that was one of the reasons why I kind of left or sold my shares of Good Semester to him and went to Computer Aid, is because I disagreed with him. And he eventually rebranded the name of the company to Square Knot, focused just in that area and kind of providing like educational guides. And what I predicted sadly came true, which was he never, over the 5 years he ran the business, got enough substantial revenue to really get off the ground, because frankly, he focused on the wrong area. And around that same time period, there was a company which you may know because you probably use it in your school, called Canvas. And Canvas grew from almost nothing company to almost $1 billion company, right? And they took almost all the market share from Blackboard. So I guess there's a couple blunders there. One is I wasn't persuasive enough to convince my business partner that the CIOs was the right path. And two, I abandoned the company opposed to trying to grow it because we could have been Canvas, you know? But I don't feel bad about that, right? Because ultimately Canvas exists and it made people's lives better and it solved the problem. So like as an entrepreneur, there's two things that you want to do. One is you have a desperate need to solve the problem and you really want to solve it. So if someone else does it, like there's some joy in that, right? And the other thing is like you want to create economic opportunity for all of the people involved. So that one didn't work out, but like it wasn't a terrible thing because it was like my college startup. I wasn't expecting it to become $1 billion company. I wasn't looking to become Mark Zuckerberg. I just wanted to learn from that experience. And that carried through to when I started Helium IQ. So I think a lot of times, if you have like a blunder in business, it's not necessarily like, yes, it is irreversible, but in the stage of your career, like you're always getting something out of it. You're learning something from it that you can take to the next part of your career.
Thank you so much, David. This has been a really fascinating presentation. I've thoroughly enjoyed it, and I hope everyone on the call has as well. I want to respect your time and everyone on the call's time, so we're going to wrap up. Thank you again, David, for being here and for sharing your expertise. As David mentioned, you'll send me the slides, and I will share those slides with everyone here today. And David, I believe also you mentioned a willingness to connect folks who are interested with some of the companies in your accelerator. So if anybody's interested in that, just send me an email and I will connect you with David after that. And with that, thank you again so much for joining us on your Thursday. Really nice to have you all. And David, thanks again for being here.
You're welcome. Thanks everyone for joining.
Have a great rest of your day, everyone.